Basics of Entrepreneurship, Student Version, Lesson 1, Part 2, Entrepreneurship. Entrepreneurship. You may decide that you don't want to work for someone as an employee, but you want to own your own business. A person who starts, owns, and operates their own business is called an entrepreneur. An entrepreneur is another name for being called self-employed. There are a lot less entrepreneurs than people who are employed. The U.S. government tracks the number of people who are self-employed. One study done by the government shows that there are 12.2 million self-employed people in the United States. This is based on the 2005 census. Note the definition of census, taking the count of people in a specific area. Entrepreneurs are risk takers. The ability to take a risk is one thing that separates employees from entrepreneurs. The entrepreneur takes a chance that they have made the right choice in starting or buying a business. They invest their money, or sometimes called capital, and time in the hopes of being successful and making a profit. Please note the definitions below. A person can become an entrepreneur in two ways. The person can either buy an existing business or start the business from the ground up. When you buy an existing business, you purchase a business that is already running. It has assets, liabilities, customers, a location, and employees. Customers are someone who pays for goods or services. Note two more definitions: assets, property or items of value owned by a business, and liabilities, debts and obligations owed to others. Examples of business assets are follows: cash, computers used in the business, machinery and equipment, money owed or receivables, furniture, cars used in the business, and or inventory or products for sale. Example of business liabilities: loans, bills which are due, bills payable, mortgages, or salaries and wages due to be paid. When you start a business from the ground up, you have to purchase assets to run the business. You also have to go out and solicit customers to use your business. Note the definitions: customers, someone who pays for goods or services, and solicit, to seek or ask in a serious way. In business, this is how you get new customers. Entrepreneurs are responsible for everything involved in the business. Responsibilities include paying the bills, hiring and managing employees, looking for new business, advertising and marketing, securing financing, and managing the cash. While the self-employed person is responsible for the business and takes all the risk, they also have the possibility for unlimited gains or monetary profits. This is one of the advantages for being an entrepreneur. Profit: the positive gain from an investment or business operation after subtracting for all expenses, or basically what is left after you pay all of the bills. It's the opposite of loss. One of the disadvantages, however, is the self-employed person could lose all of their money on the venture and end up with nothing. End of Lesson 1, Part 2.